Have you ever been asked to co-sign a loan for a friend or family member? It feels good to help someone you care about, right? They need a car, a student loan, or maybe a mortgage, but their credit isn't quite strong enough, so they turn to you. You trust them, so you think, what's the harm? You sign on the dotted line, feeling like you've done a good deed. But what you might not realize is that you've just put your entire financial future on the line. Today, we're going to talk about something incredibly important that is undiscussed nearly enough: the severe dangers of acting as a guarantor. This isn't just about money. It's about protecting your credit, your savings, and even your relationships. Stick with me, because what I'm about to share could save you from making a catastrophic financial mistake. First, let's get one thing crystal clear. When you co-sign a loan, you are not just a character witness. You are not simply telling the bank that your friend is a good person. From a legal and financial standpoint, you are just as responsible for that debt as the primary borrower. The bank sees you as a co-borrower. That means the loan doesn't just appear on the primary borrower's credit report. It appears on yours too. This is a full-fledged debt obligation under your name. The bank approved the loan based on your good credit and your promise to pay if the other person doesn't pay. And that's where the trouble begins. Let's say your friend borrows $30,000 for a car, and you co-sign. Your credit report now shows that you have a $30,000 auto loan. This immediately affects your debt-to-income ratio, or DTI. Your DTI is a key metric that lenders use to decide if you can afford to take on new debt. It's calculated by dividing your total monthly debt payments by your gross monthly income. By co-signing, you've just increased your monthly debt payments in the eyes of any future lender. So, what happens when you decide you want to buy your own house or car a year later? You go to the bank, you apply for a mortgage, and you get denied. Why? Because according to their calculations, you already have a significant car loan payment each month, even if you aren't the one physically making the payments. That co-signed loan could be the single thing that prevents you from getting the financing you need for your own life goals. You're effectively putting your own financial progress on hold for someone else's benefit. Now, let's talk about the biggest and most immediate danger: the impact on your credit score. Your credit score is one of your most valuable financial assets. It determines whether you can get loans, what interest rates you'll pay, and can even affect your insurance premiums. A great credit score can save you tens of thousands of dollars over your lifetime. When you co-sign, you are entrusting your pristine credit history to someone else. Every single payment on that loan is reported to the credit bureaus for both you and the primary borrower. If they make every payment on time, great. It might even slightly help your credit by showing a positive payment history. But what if they're late? Just one late payment even by a few days will show up on your credit report as a delinquency. A 30-day late payment can cause your credit score to plummet by as much as 100 points. Imagine working for years to build a score of 780, only to see it drop to 680 overnight because someone else missed a payment. That damage can take years to repair. And it gets worse. What happens if the primary borrower stops paying altogether? Maybe they lose their job, have a medical emergency, or simply mismanage their finances. Remember that agreement you signed. It means the bank will now come to you for the money. You are legally obligated to make the payments. The lender doesn't have to wait until the loan is in default. They can demand payment from you the moment a payment is missed. You'll start receiving phone calls and letters from the collection department. If you don't pay, they will report the non-payment on your credit report every single month, destroying your score. Eventually, they can take legal action against you. They can sue you, get a judgment, and even garnish your wages or place a lien on your property. All of this for a loan that you never even benefited from. You got none of the money, none of the car, none of the education, just all of the debt and all of the consequences. Let's consider a real-world scenario. Sarah co-signed a student loan for her nephew, Mark. He was a great kid, and she wanted to help him get through college. The total loan amount was $80,000. Mark graduated, got a job, and made payments for 2 years. Then, the economy took a downturn, and he was laid off. He struggled to find new work and eventually couldn't afford the loan payments anymore. The lender started calling Sarah. At first, she tried to cover the payments, but they were over $600 a month, which was a huge strain on her own family's budget. She fell behind. The late payments tanked her credit score. When she and her husband tried to refinance their own mortgage to get a lower interest rate, they were denied because of her damaged credit. The stress was immense. She was constantly worried about the debt, and her relationship with her nephew became incredibly strained and awkward. He felt guilty, and she felt resentful. The act of kindness had turned into a financial and emotional nightmare that was tearing her family apart. This story is not unique. It happens every single day. Banks and lenders love guarantors. Why? Because it significantly reduces their risk. They have two people to chase for the money instead of one. If the primary borrower is a high-risk candidate, your good credit essentially acts as an insurance policy for the lender. You are the safety net. But what you need to ask yourself is, who is your safety net? If you have to spend years paying off someone else's debt, who will help you? If your credit is ruined and you can't get a loan for an emergency, who will co-sign for you? The reality is, by co-signing, you take on 100% of the risk with almost zero control. You can't repossess the car if they stop paying. You can't force them to sell it. You are powerless. Your only recourse is to pay the debt yourself and then try to sue the primary borrower to get your money back, which is an expensive, time-consuming, and emotionally draining process that rarely ends well, especially with family and friends. So, what should you do if someone asks you to co-sign? It's tough, especially when it's someone you love. Saying no can feel like you're letting them down. But you have to reframe the situation. You aren't saying you don't trust them. You are saying that you must protect your own financial stability, which is a responsible and necessary thing to do. Be honest and direct. You can say something like, "I care about you, and I want to see you succeed, but I have a personal policy to never co-sign loans for anyone. It's a financial boundary I've set to protect my family's future, and I can't make an exception." By framing it as a personal rule, it becomes less about them and more about your own financial principles. You can also offer to help in other ways. Maybe you can help them create a budget to save for a larger down payment. You could help them research lenders who specialize in loans for people with lower credit scores. Or, if you're in a position to do so, you could offer them a small personal loan with a written agreement, or even gift them some money towards their goal. Gifting $1,000 is far less risky than co-signing a $30,000 loan. The fundamental reason someone needs a co-signer is because the bank, a professional institution whose entire business is assessing risk, has determined that they are too risky to lend to on their own. If a bank isn't willing to take that risk, why should you? They have entire departments dedicated to this. You have your gut feeling and your love for the person. Unfortunately, in the world of finance, love and trust don't pay the bills. The best thing you can do for your friend or family member is to encourage them to build their own credit and financial independence. It might take them longer to reach their goal, but they will get there on their own merit, without putting your financial well-being in jeopardy, and your relationship will remain intact, free from the stress and resentment that so often comes with co-signed debt. Before you ever consider signing that paper, I want you to pause and ask yourself 3 questions. 1. Am I financially prepared and willing to make every single payment on this loan, from the first to the last, if the primary borrower cannot? 2. Am I willing to accept the potential damage to my credit score, which could prevent me from achieving my own financial goals, like buying a home or starting a business? And 3, is my relationship with this person strong enough to withstand the immense pressure, conflict, and potential resentment if things go wrong? If the answer to any of these questions is no, then you have your answer. Don't do it. Your financial security is too important to gamble with. It's not selfish to protect it. It's responsible. Thank you for watching. I know this is a serious topic, but it's a conversation we need to have. If this video has helped you or you think it could help someone you know, please give it a thumbs up and share it. And don't forget to subscribe for more content to help you take control of your financial life. Stay safe out there and make smart decisions.